Hello traders, Gary Wagner here just after 11:30 in Honolulu. It is Wednesday, October the 11th, 2017, and this is the Daily Report for Gold and Silver. Following the release of last month's FOMC meeting minutes, we had gold go from the negative to the slightly positive, closed up only about 10 cents on the day at $12.93.90, with silver closing lower by a cent at $17.19, and that all in light of a lower U.S. dollar, closing off about 0.3% at 92.82. As we look at today's price action in gold, two things really stand out when we look at our daily bar chart, which is what we have up on the screen. The first thing is we have had 4 consecutive days in which the market has closed higher than it has opened at. That by virtue of these bars being green, that's how I've got that set up. And second thing that we notice is that there is in fact an effective level of resistance currently right around 1300, which is to be expected. We do have the market trading up nominally right now, trading just above 1294. Now, when we convert our bar chart into a candlestick chart, a couple other things will become apparent to us. And first thing that we can notice is that the pattern group that we basically looked at was the fact that at the bottom of this market, these last 2 candles, even though they're smaller bodied candles, resulted in a piercing line pattern. Piercing line pattern is simply where the market opens below the prior red candle and then closes at or above the midpoint of the prior candle, and it met all of that criteria. Lastly, a piercing line is best when found after a defined downtrend. So we've met the criteria of all of that. We also noted the fact that when we looked at our 61.8% retracement, we never had an open or close go into that area. We did have a low come into that area, and that was the lowest low that gold prices traded to on this entire correction from 1363. I've just pulled up a 3-day candlestick chart in which what I find interesting is how this extreme low in the market that came in a few days ago actually turned out to be a hammer. And the reason we can positively identify this candlestick type as a hammer is that it has to occur after a defined downtrend, first of all. The second criteria is that the tail is at least 3 times the length of the real body, and it comes in just at about 2.5, 3 times as we look at this hammer here. It was also followed by a confirming candle, meaning that on the next candle, we had a green candle with a higher high and a higher low. And traders, while there is no discernible pattern on our weekly chart of the last 2 trading weeks, we can see that this 2-day candlestick chart does give us a variation off of a 3-river morning star in which we've had our defined downtrend. We have our large red candle. The reason I'm labeling this as a variation is we then have 2 stars gap below the real bodies of them, and then we have our final candle, this green candle right here, completing the pattern. And traders, of course, that is all in light of a lower U.S. dollar, and dollar weakness is really what we were talking about at the end of last week, the beginning of this week, as something that would have to coincide with any kind of bottom action in gold and that key reversal, the pivot point in which gold prices in essence shifted from bearish to bullish. We would have to see almost the dollar itself move from bullish to bearish. We talked about the fact that we had identified 94 as a key level of resistance within gold pricing. We also spoke about the fact, and this is a 2-day candlestick chart, that last week we did see the market actually move to this price point but fail. And over the last 4 trading days, meaning Friday through today's action, we have seen the market track lower, losing about 1% of value since it hit these highs at 94. Therefore, my recommendation is to maintain our current long position in gold, maintain our current stop, but we will be looking to move that stop up higher before the end of the week. Traders, today's release of the FOMC meeting minutes were definitely favorable towards gold. As we saw, there was not an absolute certainty, although a high probability, of that interest rate hike in December. Now, I truly believe that the interest rate hike has already been factored into the market, and if by some slim chance they do not raise interest rates, we will see gold take off substantially. This has been Gary Wagner Wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.